23, 684-2723. If you happen to be in Warren County, we also have an office in Lebanon that serves the Warren County community as well. So I think, Nicole, I'll turn it back to you at this point. I hope I didn't go on too long, and thank you again for pulling this together. We really do appreciate it.
You're very welcome, Congressman. I know you talked about lenders, and as we know with the PPP, lenders were an instrumental part in getting those funds out into the community. I want to ask Robert of Stockyard Banks, who's more of a regional bank, so it's not a very, very large bank. What were some of the efforts, Robert, that your lending institution did to make certain that you effectively put those monies from the PPP into the community?
Hi, Nicole. Thanks for having me. Yeah, so Stockyards Bank we are a regional bank. We are roughly a $3 billion in assets bank. So we are truly a community lender. And it was extremely important for us to do this in a few parts. And one of them was, we really focused on our current clients off the get-go to make sure, and I can safely say that almost every client that Stockyards has that needed to be or requested to be part of this PPP program was serviced. And then the second phase of it was really to go into the community to find additional help, to see where we could add additional value for other businesses that maybe couldn't get help from there. Maybe they didn't have a current relationship, or they weren't happy with the relationship that they had, and they were looking for someone to help them guide them through this process. So that was something that was very important to us, and we maintained that throughout and are still continually doing that.
Okay, thank you for that. So this question goes to both Robert and Abby. I think Abby is having a little bit of trouble getting on. So Robert, if she hasn't joined us, please do answer this. One of the things that this crisis has taught us is the importance of developing banking relationships. Can you tell us what a good banking relationship means to you and the importance of that for an applicant?
Yeah, a banking relationship, I think, is the cornerstone of a strong business, and that is having advisors in their corner. Bankers and banks are one of those, and an active relationship is extremely important. And it's not just when you need when a client actually needs something, but it's a proactive from both sides, from the business owner as well as the banker. And really, at the end of the day, it's communication. It's taking responsibility for the information that needs to be provided on both sides. So it is definitely a two-way street. And if the relationship is all one-sided, whether it's from the business owner or whether it's from the banker, it's not necessarily probably going to be a great relationship, and it's something that you should probably continue to work on or try to find someone that meets your needs.
Thank you for that. This is going to be my final question, simply because I want to give the Congressman ample opportunity to participate before he has to depart. But I want to hear with regard to, I know that in previous roles that you may have had with other banking entities, in your current banking role, it has been important for you personally and professionally to reach out to the minority community with regard to banking programs and services. Can you please tell me why that commitment is so important, and why is your partnership with entities that have that reach into minority communities, why is that so important to you in developing those relationships?
I think at the end of the day, it's from someone that was a former small business owner and myself prior to my banking career. It's important that nobody falls through the cracks, and it goes from all walks. That that the banking relationship is so important on the startup through the complete entire process of a business owner in the business life. That if it's not if that is not fostered at an early time, it's hard to kind of bring that in at a later date. and myself personally here during this PPP program, I did 22 apps, 11 of them. 11 of these applications that are in process are with minority-owned businesses. So it's really half of my book of business is minority-owned business, and that's something that has followed me through my career. And it comes down to really making sure that there is the underbanked portion of the business community has access to capital and has access to a relationship banker.
Excellent, excellent. Thank you so much for your participation in today's call. I'd now like to turn the floor over to Deborah Davis, Director of the Minority Business Assistance Center. Deborah, good morning, and thank you so much for participating.
Good morning. Thank you, Nicole, for the introduction. Thank you, Congressman Chabot, for attending this event today to assist Cincinnati businesses in navigating through this difficult time. Since we are short on time and I want to make sure everyone has an opportunity to address a question to you, Congressman Chabot, I'm going to skip right over the rest of my introduction and talk about the rules of engagement for today's town hall. Number one, you must participate. All questions should be 20 seconds or less to accommodate previously submitted questions or live questions. Number two, you must take advantage of this opportunity to be heard, state your issues or concerns. Number three, if you have a question, type it in the chat box and I will read it. All mics will be muted. If you want to ask your question yourself, use the chat box, type speak, and raise your hand. Make sure your name is associated with your video. Okay, so those are the rules of engagement. So let's get started. I have a question that I want to start, and my question is regarding resources outlined in the CARES Act and their availability effectiveness to minority communities. So let's talk about the Economic Injury Disaster Assistance Loan, better known as EIDL. Given the fact that COVID-19 is disproportionately impacting African American communities, and we already know that wealth and racial disparities exist within this demographic. We also know that 95% of African American owned companies are sole entrepreneurs, and under the change guidelines, only $1,000 was granted to companies based on the number of employees they had. This decision essentially cut the lifeline of thousands of African American businesses who would not benefit from the grant, benefit from the grant in comparison to their non-minority counterparts. What is the solution? Congressman Chabot?
Well, one thing is additional funding, which Congress did take action in replenishing the EIDL loan program, the funding. What happened is the EIDL loan provided for up to $10,000 for a small business, and that is generally, forgivable. It's something that you don't have to pay back. However, the fund was running out of money, so the SBA and the Treasury Department, in order to stretch out the available funding until Congress could act again and replenish the fund, was to say that let's say you had one or two employees, well, you couldn't get the $10,000, but we give $1,000 per employee up to 10 employees. So they were still giving the $10,000 advance that was called for under the EIDL loan program, but they were trying to stretch the dollars. And so they made it $1,000 per employee up to 10 employees instead of just $10,000. That was not a decision that Congress made. And we have different branches of government, of course. I'm in the legislative branch in Congress. The executive branch, the SBA, is actually under the executive branch, along with the Treasury Department, also under the executive branch. And in trying to implement these programs and make the funding last, that was a decision that they made. Now, what we did do, again, was to replenish that funding. We put something like another $50 billion with a B in the EIDL loan program, as well as another $310 billion into the PPP program, on top of the $350 billion that was already in it. So we've already funded these, the PPP program, in the amount of about $660 billion. And there's about 140 or so billion left. So those who need the loans, the money is there if they need it. And if you have questions about these beyond what we have time to answer today, please contact our office. My office can answer questions, can assist people. I was actually going around to a number of businesses that got PPP loans over the last few weeks to see how it's working and get their suggestion for changes. So we're open to suggestions here today.
Okay, thank you so much, Congressman Chabot. We do have a question from Rhea Walden. And Rhea wants to know, are there any plans to include the cost of personal protection equipment as part of the PPP plan? This is an example of regulatory burden that disproportionately impacts small business, especially minority-owned. Congressman Chabot?
Yeah, well, as far as PPE equipment, I mean, people certainly can purchase this. I want to also make sure that our system's working here relative to my staff and make sure that Rob and Joe are on the lines. And so when I'm gone, actually, in about 10 minutes, they'll follow up. So Rob or Joe, are you able to weigh in on this at this point?
Sure. This is Joe. Yeah, actually, this has been a pretty hot topic over the course of the last couple of days. We see it as not a bad idea. It's definitely something that we would like to consider. It does not appear to be in the legislation that we are considering this week going forward, but there's going to be more of this coming to pass. And the idea of allowing utilization of PPP funds as a forgivable expense for PPE purchases has a pretty broad bipartisan support on the Hill. It's just a matter of getting it in a package that'll actually move and will actually become law. So we're working on it. This isn't the first time we've heard it. We think it's a pretty good idea. It's just a matter of whether or not we can get it done.
Thank you, Robert.
Just to add on to what Joe just said, right now, as I think most people probably on this call are aware, in order to have the money forgiven, it has to be used for either payroll, and at this point it's 75% payroll, or rent, or interest on the mortgage, or utilities. But that doesn't mean we couldn't add other things in there, for forgiveness as well. At this time, it's not in there, but that's the type of thing that we're taking up, right now.
Thank you, Congressman Chabot. We do have a question that Troy Parker would like to ask himself. Mr. Parker? Mr. Parker, are you there?
Yes, I'm here.
Okay, please ask your question.
Thank you, Mr. Chabot. My question, in the current, and maybe this might be more for the SBA, but Senator Portman had sent a letter to the SBA about in the PPP now. I can't get it because I have 6 months worth of probation left. If there's parameters that if you either have probation or your felony is not, I think 7 years old, your application is not even sent in. So I have over right now, we're up to now 80, back up to 80 employees. But we're normally in the fourth quarter of 19, we hit 120. So my question is, would you support speaking with Mr. Mnuchin about changing that rule in the SBA where people who have felonies or on probation, but yet are employing other felons could get the PPP?
Yeah, that's something that we've been looking into right now. My staff has been looking into it. As you mentioned, Rob Portman's been a leader on the Senate side on this. And what has happened is that I don't think that was directly taken up in the PPP program, but the underlying rules under the 7A loan programs are still there. And that does prevent people from getting loans under that program in certain
conference.
And so that's where you're running into the, to that challenge. So we are working on that right now. That's not in this current bill this week that we're looking at, but there are people looking into that, and we'll work with Senator Portman's office. I know he's working in the Senate. We'll be happy to work here in the House. I appreciate you bringing that up.
Thank you.
Thank you, Congressman Chabot. We do have a question from David Sherpansky. I apologize if I pronounced your last name wrong, but David's question is, the guidance is unclear regarding transportation costs. What is included in that?
Yeah, Joe or Rob, you want to take that and go into the detail on that one?
Sure. I'll start and then I'll kick it to Rob. Yeah, that's a common concern. When we wrote the CARES Act, we wanted to keep it as vague as possible so we could capture as many costs as possible. The back end guidance for forgiveness came out last Friday. We've taken a look at it. I know Rob has taken a closer look at it than me. So if he could chime in on what the IFR says when it comes to transportation costs.
Sure. Thanks, Joe. And thanks for everyone for jumping on this call. These conversations are so helpful because this, as Mr. Chabot suggested, these allow us to kind of go back to folks and say, you know, we're hearing from folks on the ground what's working, what's not working. We need to make improvements here. So thank you for, you know, sharing all these topics with us. To answer your specific question on transportation costs, this is a topic that has come up a lot over the last few weeks, where we looked for in specific language. As Joe mentioned, the back-end loan forgiveness documents came out, and under the business utility payments, the definition is the distribution of electricity, gas, water, transportation, telephone, or internet access. So if it fits into one of those buckets, the way it was written was pretty vague, as Joe mentioned. It should be allowed. We are suggesting any questions on eligibility, any questions on eligible costs, to work with your work with your lender. That will be the decision point with the lender. But as we just mentioned, the back-end loan forgiveness guidance did outline transportation. So we encourage you to work with your lender and kind of move that forward. On our end, we'll bring that back to make sure SBA and Treasury has a little bit more clarity on there for folks. So thank you for the suggestions. We've documented. We'll bring it back as well.
Let me just add on to what Rob just said there. We've been getting a lot of what are called frequently answered questions that come out of the SBA and out of the Treasury Department that go in more specificity about these things. But as Rob also mentioned, you know, you should go to your banker, your credit union with a lot of these questions, and they should be able to answer those. And one final thing I wanted to mention, because this throws people sometimes, the PPP program, of course, those loans are made by community banks, you know, credit unions. The private sector makes those loans. It's federal money. It's your tax dollars, but it comes from, you know, it goes through the banks. With the EIDL loan program, that's different. You apply directly to the SBA for the EIDL loan program. You don't go through a bank. And a lot of times that kind of throws people off. So I wanted to make that distinction. Thank you.
Thank you, Congressman Chabot. We do have a question from Greg H.O. And Greg wants to know, he says, our company has applied for the EIDL loan and have received a confirmation number. How can we follow up on the status of this loan? Yeah,
well, that one you don't go to your small, you don't go to your community bank since you go directly from the government. And the SBA, they have been just overwhelmed with requests on all of this stuff. They stood up the PPP program in a week from Congress passing it and the president signing it into law. And they were just overwhelmed with calls and requests. They, for example, gave out as many loans in 2 weeks as they had in the previous 12 years. That's how overwhelmed they were with the demand on here. And the EIDL loan program, it's different from PPP, but it's also, you know, it's been a challenge. And even the SBA itself, and I think Nicole can confirm this, even the SBA itself has trouble getting questions answered from the SBA. So I don't know if the SBA folks might want to enter into that answer as well. Nicole or anyone else on that one?
Yeah, I want to make sure, is Mr. Camp on the line? He is from the Office of Disaster Assistance.
Hello. You hear me?
Yes.
Yes. Well, the primary way is to, of course, call our 800 line, 1-800-659-2955. I realize that there's been a tremendous call volume there, and sometimes the waits have been long, and I apologize for that. But we're getting to as many people as we can. We're going to.
I'm sorry, Mr. Camp,
Hello?
we can't hear you. We couldn't hear you.
Do you hear me now?
Yes.
Okay. But, you know, we want to encourage everybody to call our 800 number, 1-800-659-2955. Please be patient. Please be persistent. Don't give up. And we'll get to everybody if you'll just bear with us, because we are here to serve you, and we do want to give you the answers to the best of our ability.
Okay, thank you, Mr. Camp. From Benjamin, we have a question, and Benjamin wants to know, what are the distinct challenges in making any changes, whether suggested on the call or by others, as it relates to the PPP? So what are the challenges that may be faced in making these changes?
Well, the challenges are a number of things. I mean, one thing is that it has to be bipartisan. You know, the CARES Act, PPP, it wasn't just Republicans, it wasn't just Democrats, it was actually Republicans and Democrats working together and then with the president and getting this passed in record time. So, you know, you always hear there's no bipartisanship, and, you know, they're always fighting, and fights do happen, there's no question about that. But we have to work in a bipartisan manner. So the changes that we're talking about this week, for example, has to be done bipartisan. I'm working very closely with the Democratic chairman of the Small Business Committee, Nydia Velasquez, and she's the chairman now, and I'm the ranking member, meaning the lead Republican on the committee. But the last two Congresses, I was the chairman, and she was the ranking member. We worked together then, we're working together now. And Congress actually, at least in this area, has been working together pretty well. That's not what you see on TV generally. You know, what they tend to show is when we're arguing and fighting, and we don't throw chairs at each other necessarily, but that kind of stuff is what you see on the news. So challenges are making sure that it is bipartisan, that it's something that we're taking in the long-term ramifications of whatever we pass. But I actually have to drop off now because I have a meeting starting at 10 o'clock on the changes in the PPP program that we're making this week. But even though I'm not going to be on, Rob and Joe, on behalf of the Small Business Committee, will stay on the call. And you can't see them because they're here by phone. So I'm not sure what's appearing on your screen, but you can take whatever they say is basically you know, me answering the question. And Nicole and all the folks from the SBA and the African American Chamber of Commerce, as well as the Cincinnati Chamber of Commerce, I want to thank you all for pulling this together. I'm going to have to run off to that other meeting now, but thank you very much, and I'm going to have to leave. Thank you.
Congressman Chabot. Okay, we have a question from Mark Wilson. So Mark wants to know, I am particularly interested and sensitive to what has been a constant moving of the goalpost by the IRS and the rules for what is and what is not forgivable. Can you explain to him why this goalpost, as he says here, continues to move?
Sure, this is Joe. I'll start, and then again, I'll kick it over to Rob. As I mentioned earlier, we intentionally wrote the CARES Act to be very vague. The reason we did that was we wanted to capture as many businesses, as many as employees, in as many situations as possible. So that does create a little bit of a problem when it comes to the implementation of that bill because we were so vague. The SBA and Treasury have moved the goalposts. I will not deny that. Occasionally, you know, in terms of what is forgivable, what isn't forgivable. But as of right now, we've got the final interim final rule that came out on Friday that actually details what is going to be forgiven and what's not going to be forgiven. And now I'll kick it over to Rob to see if he has anything else to add on that.
Sure, it's a great question, and the question goes to the heart of the matter of, in CARES Act, we put in language that said the loan, the forgiveness of the loan will receive a tax deduction. As you know, and as the caller suggested, that the IRS came out and said, while the loan is forgivable, will receive a deduction, the expenses made through the covered period, so wages and salaries that are traditionally receive a deduction, are no longer able to receive a deduction during the covered period. The IRS has stated that they're trying to prevent a double tax benefit. So that is one area that we are working on right now. We don't know what the final outcome will look like, but there is congressional interest to make both the expenses made during the covered period able to receive a deduction, and the entire loan that is forgiven to receive a deduction. What the IRS essentially said was they're kicking it back to Congress's court to make that call on the covered period. We are in active discussions trying to determine how that would look. As Joe mentioned, there are a number of bills that are going to move this week. That idea is not going to be addressed in these bills, but there's going to be ongoing conversations to make sure you guys have clarity, the small businesses have clarity. So we're working as hard as we can to get to that point. We're not there yet, but it's a great point. We've documented it. We're going to continue to talk to our counterparts on the Tax Writing Committee, which is the Ways and Means Committee. But there is interest on trying to bring clarity to folks on this issue, and we hope to have it soon, but we'll keep on working on it.
Good morning. This is Mark Wilson. May I comment?
Sure, go right ahead, Mark.
Thank you, gentlemen, for your answers. The reason I asked this question about the amendments and changes are for two reasons, and that is one being when a business operator and owner makes a financial commitment, it's based upon the contractual agreement as you enter into it. We can't possibly plan for future financial obligations when we're actually finding ourselves creating debt rather than relieving it. And my second question about this is, you say you're working on it, but you've got to keep in mind that the banks want to get these off their books. So we've got 2 weeks, essentially, before any action could be taken in Congress or the Court of Congress, as you stated, before it's meaningful. After that period, we have to sign off and close out what we owe or do not owe in terms of forgiveness.
And this is Rob. Thanks for those questions, and I'm happy to comment on them. Your first part, knowing the full rules of the road at the beginning of the process, is vitally important. As you know, the program went live on April 3rd. You guys received the front-end loan calculation guidance that evening. I think it was about 11 o'clock. We said from the beginning that a business, as you explained, needs the entire comprehensive framework to make business decisions. You need to know at the front end the loan amount calculation and how you're going to apply the loan forgiveness to make everyday business decisions. We've heard you from the beginning on that, and we've been working with them as hard as we can, pressing them to get the entire guidance out the door. As Congressman Chabot suggested, we know that this is unprecedented times, and we asked them to do write regulations that usually take months and months and months to do it in days. So we hear you. We know it's not fast enough. We're going to continue to work on that. If you go to your second piece, the 2-week window right now, that for some folks who started the program in early April, you're in week 6, week 7 of the covered period. As you stated, we are very close to the end of the covered period. What is Congress doing about that? I know it's not quick enough. That is exactly one of the things that we're trying to deal with right now in the bills that are going to be on the floor this week. There are ideas to extend that covered period out 24 weeks, taking into account the amount of decisions that need to be made for loan forgiveness. It's a great idea, but as we all have been talking about, just shifting dates, there could be some unintended consequences, and that's what we're trying to work through right now, is to make sure it's as clear as possible for the businesses and the lenders in the process. So I know we're up against the window. It sounds like there's folks coalescing around an idea right now, and we hope to have an update for you later today, even in tomorrow. The scheduled vote right now is for tomorrow morning. We're trying to get as much of that information into this bill to provide some an extended runway, and we're doing it with the reasons exactly as you stated. We're up against the window, and we're trying to make sure all the small businesses have enough flexibility there.
Sure,
Thank
and
you
this
so
is
much.
Joe. This is Joe. Just to tag on to what Rob had said. I know you fully realize this, but there are 535 members of Congress between the House and the Senate, and getting them to agree on anything is very difficult, especially when you have a divided government with the Democrats controlling the House and the Republicans controlling the Senate, and also a very vocal administration. It's not easy. We hear you. We share your frustration. We have been advocating for everything that you have brought up in your question. It's just there's a lot of inertia here at this place, and no matter how hard you push, sometimes you can't get things to happen as quickly as you would like. But please know that we understand exactly where you're coming from, and we are doing our darndest to advocate for those positions to get this stuff out there so that you folks know what's going on as it's happening.
Thank you very much.
Thank you, Joe. I'm going to have to interrupt because we do have several questions of people, and I want to make sure everyone has a chance to get their question asked and answered. So Barb Smith wants to know, her question is, the criteria for the EIDL loan included in eligibility was for those companies who do not have credit available elsewhere, but yet personal credit scores weighed on the decision of being granted an EIDL loan. If the SBA will deny loans based on this criteria that is, quote, normal for lending institutions, how will these funds get to those companies that need the funding, have a viable business structure to repay the loan, but are being denied for traditional, quote, reasons such as credit scores? Rob, Joe, anyone?
Actually, I think the SBA would be in a better position to answer this question.
Okay.
Jack from ODA, do you mind taking that one?
Okay, certainly. Well, you know, these are loans, and they will have to be repaid. We are offering very generous terms on them, up to 30 years, but still, you know, after a year, people will begin to have to pay the loans, and credit scores are an indication of the likelihood of whether or not people will repay a loan. And it's not in anybody's interest to make someone a loan if they're not going to be able or willing to repay it. It causes problems for everybody. So we need to take that into consideration when we make the decisions. But on the other hand, we also are a provider of disaster assistance, and we want to make as many of these as we can. So our credit criteria are typically less strenuous than you might see from a traditional lender. In addition, if we aren't able to offer somebody a loan due to their credit history, we do give them the right, we give them 6 months to come back to us and ask for us to reconsider that decision, to explain the factors that have affected their credit score. It could be, you know, temporary things such as medical expenses that they've had in the past. If someone, you know, close to them became very ill and they had unforeseen medical expenses that were uninsured, or it could be something that's due to the COVID crisis itself. Explain that to us, and we'll look at your individual circumstances to see if we can turn that around and get you the assistance that you need.
Okay, thank you, Jack. We have a question from Steve Mulch. Steve, would you like to ask this question? I see you have in here that you'll be happy to ask this yourself. So are you there, Steve?
Yes, I am. Can you hear me?
Yes, please
Good,
go ahead
good.
with your question.
Yeah, absolutely. The essence of my question is the PPP loan has been extremely helpful, and but it's going to turn out to be a short-term solution. And in the restaurant business, we recognize we're going to have a long-term problem. We got caught up in the crash of the SBA website. Our application went in on March 22nd and was confirmed on the 24th. We were told we were in process. Twice I've been on the hotline. I've been told I've been processed. A couple of weeks ago, I learned that the application is lost, and now I'm at the back of the line. We're not going to survive if we don't get a longer-term loan other than the PPP to wait for our business to come back. What can we do to rectify this issue?
Sure.
Joe?
This is Joe. Yeah, we understand that the SBA did have some processing problems with the glut. I'm not sure where they are in rectifying that. Perhaps the SBA representative could have a greater insight. My advice would be to be persistent and patient with it. It sounds like it's not a good situation for you, but without knowing the full details, it's difficult to recommend a solution. But perhaps the SBA could recommend something to help alleviate a little bit.
Mr. Camp?
Yes, thank you. We're advising people to go back to the new Rapid portal and reapply. And once they get their application in, their new application will be date stamped with the old application. Now, this is the recommendation to reapply is only for people who have a 2000 series application number. If you have applied and have a 3000 series number, don't reapply. That number's in our system. We'll get to it as quickly as we can. But if you have not been able to complete an application on our new application portal, our new platform, you want to go ahead and do that. And like I say, we will date stamp that the date of the 2000 series application so that you don't lose your place in the queue.
Okay, thank you, Mr. Camp, for that. We have a statement, not necessarily a question, from Valerie Chenault, and she says, I think what most business owners find frustrating is the lack of guidance on the forgiveness of the PPP, which seems to vary bank to bank. So can any of the bankers on the panel address this for Valerie?
Abby, I know that this is somewhat a policy question, but it also touches in the lending world. You want to go ahead and give us a shot at it?
Sure. Thank you for having me. Sorry for being late. We've actually put guidance on our website for what are forgivable expenses, and we are trying to communicate to anybody who has applied for a PPP loan what they can be doing after they've received funds, how they can retain their records, what is eligible, what we've, are giving guidance wise. So if, that's what we are doing. I don't know what other financial institutions are doing, but we're at least communicating what we know when we know it to our customers.
Okay, thank you, Abby, I'm sorry. The next question is from Stephen Manas. I'm sorry, Stephen, if I pronounced your name wrong. His question is, our businesses dynamics are possibly going to prevent us from being busy enough to need a full head count of full-time staff at the end of 8 weeks forgiveness timeline. It would not be financially prudent for us to hire them back too fast. There has been talk about extending the timeline to 16 weeks. Is that true, and when would that happen, if so?
Sure. This is Joe. That is something that is in the legislation that we are discussing at the moment that is scheduled for a floor vote on Thursday morning, tomorrow morning. Currently, as the bill sits right now, we are looking to extend that covered period to 24 weeks because we have heard specifically from the restaurants and the hotel folks, most notably, that with the stay-at-home orders and even when you do get back to being in business, you may be forced to only operate at 50% capacity, things along those lines. So that is something that has very broad bipartisan support. I can't say that it's definitely going to be in the bill, but I do know that it has very, very strong bipartisan support. It's something that we are pushing for, but these are still active negotiations, so anything can happen. But prospects look good, in my honest opinion, for that.
Thank you, Joe. The next question is from Mary Jo Harvey. Mary Jo wants to know, can you get an EIDL loan if you currently have a 7A loan? Anyone from the SBA?
Well,
Yes.
actually, this is Joe, but I'm sure the SBA can chime in. The answer is yes.
Yes,
Okay.
that is correct.
Okay. All right. Thank you. The next question is from Steve Molsh. No, I already read that. Okay. Let's see. All right. Rhea Walden has another question. It is not uncommon for small and minority-owned business owners to have lower credit scores based on utilizing personal credit to finance their businesses because they don't have the same access to traditional financing. When will consideration be given to utilizing personal credit? Traditionally, these expenses are not normally included in equity. Anyone from the SBA or the financial institutions?
Well, under an economic injury disaster loan, the eligible uses of the program are wider than they are for the PPP loan. It's basically for your operating expenses. And if you've been using your personal credit cards to support your business's operating expenses and can show a history of that, then yes, those can be eligible things to consider. It's important, though, of course, that you have a wall between your personal expenses and your business expenses. So, it's easy to see that is a business debt as opposed to a personal debt. But that is something that we can consider under the EIDL program.
Thank you. And then we have a question regarding rent relief. A business owner wants to know, they need the EIDL loan to pay their rent. They pay $12,000 in rent a month, and they are not able to have their business open because they are considered not essential. Is there any way that the EIDL loan can assist them in paying their rent so that they can maintain their business? They've been in business for 22 years.
Rent is absolutely a covered item under the EIDL program. It's a normal part of your operating expenses, and we can allow you to use loan funds for that. Loan funds can be used to pay any of your ordinary and necessary operating expenses, as well as your existing fixed debt payments. We can't refinance long-term debt, but for example, if as opposed to rent, you had a mortgage on the business, you could use the loan funds to make the monthly payments. So both the rent and the mortgage payments and the associated expenses like insurance or maintenance, that's all eligible under the EIDL program.
And
Correct.
Jack,
And
well, I'm sorry, go
this
ahead.
This is Joe. If I could tag on to what the gentleman just said. You are permitted to get a PPP loan and an EIDL loan as well at the same time, as long as you use it for different purposes. So in this instance, the $12,000 a month for rent, if you were able to get a PPP loan, you could use a significant amount of that loan to pay your rent. And most of that, if not all of it, would be forgiven. So you can use a PPP loan, which is 1% with a 2% two-year maturity on that loan to pay your rent, to pay your employees, to pay your utilities. And then you could also receive an EIDL loan, which you could then use to have operating costs, inventory, things along those lines. Those loans are a much longer term. Those are 30 years at 2.75% for profit businesses. So you can utilize both programs and kind of split it up to get the most bang for your buck and the most forgivable parts of it. But that might be worth something to check out, because if you use that money out of the PPP for rent, most, if not all of it, will be forgiven.
Okay, thank you. I do have a request for Jack to explain the process of being reconsidered after a denial. One of the business owners would like a little better, explanation as far as that is concerned. Jack, can you explain that process?
I'd be happy to. They need to
Sorry, Jack, we lost you. Jack? Okay, let's go on to another question. I'm not sure what happened to Jack. So Jack Lane.
back.
Oh, you're back?
Hi.
Okay, sorry.
I'm sorry, I was trying to pull up a document to look at something. But basically, you'll need to get in touch with our office in Texas, our processing and disbursement center in Fort Worth. The address is on the letter that is sent to you telling you why we weren't able to offer the loan. There's also an email address you can use, and you need to request reconsideration. Do that in writing. And you want to address the reasons why we were not able to offer you a loan. And that same letter tells you why we weren't. I would encourage people to, if they've got a CPA or a lawyer, someone that they sit down and talk to them. If they don't, there are services available through our SBA resource partners, the Small Business Development Centers, the SCORE, Service Corps of Retired Executives, Women's Business Centers, and our Veterans Business Outreach Centers. Contact one of them and sit down with one of their advisors and let them give you some advice on how best to address the deficiencies that were outlined in the letter. For example, if it's your credit, get a copy of your credit report, look at it line by line, look at the derogatory credit. Why is it on there? Is it something that was temporary? Is it something that you've taken care of? Is it something that's in error? Is it something that's been resolved, or you have you've worked out a repayment plan and you can show that you've been complying with that? These are all things that we'll consider. Another thing I saw where someone here was mentioning that we said that they hadn't documented economic injury. That could be an accident of your application. I've seen some of those where people. Yes?
I'm sorry to cut you off, but we're on a time constraint.
Okay.
I'm getting some direction in the chat. So I have one question that I want to ask before we have to get off here. So Jack Lane, business owner in Cincinnati, wants to know, what can you do if you don't qualify for the EIDL loan but already received the PPP loan? Joe or Rob?
Well, I mean, I don't understand that. I don't really understand the question. If they weren't able to get an EIDL loan but were able to get a PPP loan, I don't know how to answer that.
Okay.
What's the question?
Well,
I think the question, I'm sorry, Jack, would you like to ask your question?
Well, they should ask for reconsideration if they think that the reason why they weren't offered an economic injury loan was an error. You know, they should follow through with it. And as I mentioned, it's best to go get some professional advice, perhaps, and in most cases, to help you know how to best address the problems that you encountered.
Okay, all right, thank you, Jack. So at this time, this concludes the question and answer section part of this town hall meeting. I'd like to now toss this back to Darren Reedus, who is going to conclude the program for us. Thank you so much, everyone, for participating. Darren?
Oh, thank you. A special thank you as well to Congressman Chabot, Robert, Abby, and Joe for being with us today. Thank you to Nicole and the SBA for organizing this discussion, and thank you, Deborah, for facilitating. We hope you found this as valuable as I did. As you heard often, money is still available, so please do reach out for assistance. We wanted to make sure also you tuned in to our Restart resource, as this is a place to share return to work plans, share PPE resources, and find additional information. Thank you to our members who joined us today. If you are not a member, please do consider joining us. We are here to help you today and into the future. Thanks again to Fifth Third Bank for sponsoring this platform. Each week, we provide business briefings and peer-to-peer roundtables. Please take note on the slide of our upcoming events. Our entire team at the Cincinnati USA Regional Chamber is dedicated to keeping our business community united through this crisis and strong as we recover. Please let us know how we can be of service to you. Meanwhile, please do stay safe, respect social distance, and keep those hands sanitized. Again, thank you to all for participating, and have a great day.